Okay. How are we doing, everybody? Nice to see you all again. So, obviously, as you know, I am mostly a fundamental trader. For those who have not joined my live before, my strategy is actually fairly simple in terms of I do probably about 80% fundamentals and then about 20% technicals. So what we need to be doing, right, or how I like to teach people, or just kind of give people a bit of a little bit of a push, is you should always be having your bias before you even look at the chart. So basically, if you understand or you know that, for example, I don't know, New Zealand is not in a good state at the moment, you know without even looking at a chart that NZD should be weak. And therefore, what it allows us to do is it allows us not to be clouded by volatility. And that's what I want to be teaching us today, or just in general through our sessions, is just how do we navigate, obviously, number one, through fundamentals, but obviously, how do we apply that onto live charts as well? Because some of you may know, I might have said this to you before, but back testing is obviously very important. But forward testing is, in my opinion, more important, because when you're looking at it in hindsight, you kind of mold a way to understand why price action did something the way it did. But when you're looking at it in forward testing instances, i.e. trading it live, it's obviously completely different. And what we want to do with fundamentals, it tries to allow us to predict or have a good understanding of where price action can be in the future. And that's what we're trying to do. So let's have a quick little look at some charts. Are there any charts in particular you want me to look at? We'll have a little look at the calendar as well and see what news we have this week. Finally, the US shutdown is ending. So we're starting to see some data come through. So before I look at some charts, let's have a quick little gauge at the calendar and see what we've got going on. So let me move the chart over here. Perfecto. Now, let's go from yesterday or just this week and see what we've had. So let's quickly have a little look. Whenever you're looking at data, you always have to be thinking, what is the theme? So let's just go on the DXY and get up a white little blank screen. Always, before you kind of understand what data means or how you interpret it, you have to think, what is the theme? So the theme basically is, what is everyone banging on about? So if everyone's talking about the Fed, or if everyone's talking about rate cuts, or if everyone's talking about a war, for example, or anything else, politics, could be whatever, you then have to think, how does this data allow us to understand what the theme is going to do? So for example, if we know that the theme is about rate cuts, right? All you think then is, what data tells us what rate cuts are going to do, ... So any data that suggests what rate cuts are going to do, that will move markets. Stuff like trade balance, or stuff like, just trying to think of some other slightly minor instances of data. It's probably best to look at the calendar and I'll get a good idea. Stuff like industrial production will not obviously move markets. Stuff like housing starts will obviously not move markets. So what you were doing basically is trying to crunch down what is important and what isn't important. And you only know what is important by understanding what the theme is. So like I said, if everyone talks about rate cuts, you only look at data that suggests rate cuts. Everything else does not matter. That way you crunch it down from a huge calendar like this to basically a handful of data. And then trading becomes, or fundamentals become a far more simpler. What I did at the start was, unfortunately, I had to go the long route because nobody was really teaching fundamentals, right? So I had to go out and learn every bit of data that I could, try and interpret it, try and forward test it, get confused. Then I have no one to go to because obviously no one's teaching it, because fundamentals are quite per se difficult. And then forward testing, chop and change and forward testing, and then eventually it does make sense. So what we're doing now is I'm trying to give you a fast track into what is important and what isn't important when you're looking at fundamentals. So basically, like I said, all you're doing is thinking about what the theme is. So right now, I can tell you that the theme at the moment, let me ask this. Does anybody know what the theme of the market at the moment is? When we're looking at FX in general, what do you think the theme of the market is? Try and think. What is everybody talking about at the moment? That's how you know what the theme is. So let me just quickly have a little look here and see what charts. I believe earlier I saw dollar yen, if I'm correct. Gold, dollar yen, cable, GU, no problem. We can have a little look at that. I've always found the ideal fundamentals very vague. True. I think there's a good reason for that. And when I started in 2018, right? So many, many years ago. But when I started, it was always pushed that fundamentals is not important, or it's there to confuse the market or there to confuse you as a trader. When in reality, if you just think about it, traders and investors are not going to just invest a lot of money onto a couple of lines on the chart. That's the question I asked myself in COVID. So that's when I started learning fundamentals, is in COVID. Before that, I was a purely technical trader. And that was because I was told that it's not important. And it's there just to stop people out. When in reality, what it is actually, and what I had to learn the hard way, is that it allows us to understand where charts are going to be in the future. It has a predictable value. Obviously, you can never be 100%, but it can give us a good value on the future, and we just position ourselves accordingly with technicals. Technicals gives us entries. It gives us, risk management, because you can see if my stop loss is here, I'm risking this amount of percentage. What it can't do is have predictable value, in my opinion, because it's past data, isn't it? What we're trying to think is forward data, and that comes from fundamentals. So let's have a little look. Nvidia, that is true, especially if you're trading equities. The trade war, yeah, I guess so, to a certain extent. Not as much anymore. AI bubble, for sure. That is definitely a big thing for the NAS. Global rate cuts, that is also pretty true. German 40, also. I've never really traded German 40. Last time I checked that on Friday and Saturday, it was pretty much consolidating, so I'm not sure how the price action's been since the start of the week. Tariffs and risk sentiment, for sure. So the theme basically is what will drag through most markets. Basically, rate cuts and the Fed drives through all markets, doesn't it? It drives through what you might have seen what Bitcoin has done recently. It has sold off quite a lot. And that's because we've seen an adjustment from the Fed where maybe they don't want to cut in December. This is allowing risky assets such as, the NAS, such as, obviously the NAS is a bit different because it's obviously being impacted by the AI bubble talk. Stuff like the ES, stuff like just the general stock market in general is down. Dollar did climb because less rate cuts is generally good for a currency. So that is kind of one of the reasons why a lot of that has dragged through everywhere, right? It's pulled through into the yen. So we've seen a lot of yen weakness. We've seen AUD get destroyed quite a lot. So to me, the theme is about the Fed and about rate cuts, right? Cool. Now what do we do? Well, like I said here, if the data is about the Fed or rate cuts, anything that suggests what the Fed is going to do, and of course what rate cuts are going to do, has an predictable value. Meaning, we can then assume, based on the data, that the Fed is going to do X because the data tells us that. And therefore, we can understand what the dollar is going to do. Then we can understand if BTC might bottom out, for example. You might see if, such as the ES, might start bottoming out and starting to climb. Obviously, Nvidia's kind of holding up the stock market at the moment. But you see what I'm saying? What we think about is the theme. What actually is the theme? What data applies to that theme? And then we can create trade ideas from that. Everything else does not matter. Obviously, when you see wars, when you see like hurricanes through southern parts of the US, obviously that's when the attention turns to that. But for now, we're only focused on the theme. And obviously this also drags through other countries as well, like the UK and Europe and New Zealand and Canada, etc. So let's have a little look. What data here would we think applies to rate cutting theme? Obviously CPI. So with CPI, if inflation is sticky, basically, let's move this over here. Sticky inflation basically means inflation that isn't falling quickly enough. It can trend slightly lower, but it's not like proper falling, like 0.2, 0.3% moves to the downside on inflation. Then you got to remember, as a little bit of a lesson, is that the golden range for inflation is 2%. Now, obviously, certain central banks will have like a mandate. I think it's the Bank of Canada. I think they're at between 1% and 3%. But generally, most central banks will follow around 2%. So if inflation right now in Canada, which came in at, let me go on this website. I think it's probably a lot easier to find. Let's have a little look. Country is Canada, this is a good website, by the way, to use, Trade and Economics. Let's see. So the standard inflation rate at the moment in Canada is 2.2%. So it has climbed slightly in September, did drop to 2.2% in October. Core inflation. Does anybody know what the difference between core inflation and standard CPI is, or just normal CPI? What is the difference between them both? For example, here, the UK. Tomorrow we have CPI and core CPI. So does anybody know what the difference between those are, and what would be more important in the eyes of the market based on what they are, based on sort of the dictionary term of those two? Because that tells you basically what CPI you need to be more so focused on. For the Canadian dollar, the Bank of Canada has spoken about median and trimmed the most. What does that mean? Markets will focus their attention mostly on those two. So median did come in at 2.9%. Trimmed CPI is at 3%. So basically staying the same. 2.9%, not great. And what we interpret these bits of data, just on the headline, you can look at the underline as well. But basically what you think is, Bank of Canada stated to look at median and trimmed. They say that in their statements when they talk. Then we think, what data, or what will the data come in at? So we saw that, where is it? Trimmed medium CPI 2.9 from 3.1. So that's a nice downside move there. 2.9%. What's my percent there? And then the other one is 3%, wasn't it? 3%. So that's basically bang in on the range at the Bank of Canada, because they're between 1% and 3%. Standard CPI, which was 2.2%. So we're coming basically towards their normality now. The reason why we would probably be a little bit more bearish Canada, or the Canadian dollar, is because of the employment data as well, which I don't think we have. We might do, let me see, Friday maybe? Oh, we don't. Cool. Employment data in Canada is not great. Inflation is coming towards their normality. Is this an environment where you want to be buying the Canadian dollar on a higher time frame? Lower time frame, you can do what you want. But higher time frame, I probably wouldn't want to do that. I wouldn't want to be buying the Canadian dollar based on what the data has told us what should happen in the future. That's all you're thinking about here when you're looking at fundamentals. Now, it's obviously, you do have to sort of learn what the terms mean, how markets interpret it. That all comes with time and sort of experience, I guess. But generally what you're thinking here is, what does the data mean? What has the central bank stated? And will this data, in your opinion, impact the central bank in the future? And then you take a trade idea based on that perspective. And then you just compare the CAD, because you know you want to be bearish CAD, versus somebody who's a little bit better. And that's a trade. So let's see. Core is without food and energy. That is correct. So core inflation is the most important, right? When they say food and energy, food being like wheat and corn, very volatile because it can be impacted by weather, can be impacted by wars, supply chain issues. That's why it's volatile. Obviously, with energy, there's stuff like gas, oil, same as food, really. It can be impacted by weather, wars. It can be impacted by refinery issues with oil. That spikes oil prices. That can skew CPI. So core CPI is important because it strips those volatile and gives you the true measure generally of what CPI is. So that's what we mostly focus on then, is core CPI. Even if we see a slight uptick, a slight move higher in standard CPI, but core is trended either sideways or the underlying is a little bit weaker, even though you might have seen a little bit of a spike higher in the price, you know generally that price should go lower. And a lot of those reactionary price action that you see on news events is mostly being driven by algo. We're not talking about like the algo that most people are sort of referring it to. We're talking about the algo that banks use when they're using their quants, etc. So obviously that's very reactionary, high frequency. And then what generally happens is it exits very quickly and then it just dumps in price. That's when it has that big wick. And there's a reason generally why you see a huge reaction first, because it's algo driven. And then what happens after is the true reaction of the market comes into place, where that's when it creates that big wick. And then you see a large reversal because the data suggested it should go that way. That's important to think about. The giveaway will be probably in about, let me think, about 15, 20 minutes time. Forex Factory helps a lot. I agree. I've used this since the start. The reason I like it is because it's very simple and it's very visually pleasing. You can look at other ones like Trading Economics, which generally does have a bit more data in it. It's also a very, very good website. We've always recommended it. But as you can see, it doesn't visually look as good as Forex Factory, in my opinion. That's just my opinion. So let's have a little look. So that's what we're thinking about. Every bit of data, you're thinking, what does this mean for the theme? And we know because the central bank in Canada has stressed median and trimmed the most, we focus purely on those. The data comes out. We look at the large sort of an average of that data as well, like the last 3 months or so. And then that gives you a bias on said central bank. That's just looking at CPI. Obviously, you can look at unemployment rate, employment change, etc. But just with CPI, that's what you'll be thinking. Because we also know that the theme is also about what the Fed is doing. FOMC members are also very, very important because what the dollar does or what the Fed is going to do will also impact what other asset classes are going to do as well. Like if you look at the bond market moves on expectations of the Fed, especially if you're looking at the front end, like the 2-year. So whatever the Fed members say, like Williams, Jefferson, Waller, that will have an impact because people are so focused on what the Fed is going to do. For December, they're looking at anything that can give us a good guidance on that. That's why you see volatility at the moment around Fed speak. Sometimes you don't see volatility because the markets are very clear on what's going to happen. But because we're unsure because of the lockdown, obviously it's ended now, but during the lockdown, people are like, oh, you know, when we're unsure, Fed speak should give us a good guidance. That's why there's a lot more volatility around those. So yes, Fed speak at the moment, very, very important. Then let's look at some other ones. Let's look at purely data here. Obviously, policy meeting minutes. I believe we do have some tonight, don't we? Yeah. Meeting minutes, basically, it's like a little statement that comes out and the markets interpret it whether or not something new is there. Remember, markets move on new things. They don't move on old things that's already priced in. Unemployment claims. This is a weekly set of data and generally below 250K is a good figure. So a little bit of a rise to 230 is not that big of a big deal. So even though it's high impact in regards to markets, it actually didn't have much of an impact on the dollar because it's within norm data anyway. Let's see what else we have here. A lot of FOMC members speaking yesterday as well. You'd have to look at like stuff like Bloomberg or any news websites to see what they say. And then the rest of there is probably not that important. PPI, RBNZ is not really focused on PPI, so therefore it strips away its volatility. Then today, what did we have? Wage prices. So wage prices is obviously very, very important, because what does anybody know what wages will do in general? Just think about whenever I teach fundamentals, I always say, put yourself in the shoes of said person. If you see a raise in your wages, what generally happens? I know for sure what I would do. I'm not sure about everybody else, but what do you think happens when wages increase in an economy, or vice versa, decreases? But let's look at it in the eyes of, let's say wages increases. What do you think happens to general consumers of the economy? What do they do generally? Remember, put yourself in their shoes. Let's say you get a pay rise. What do you think is going to naturally happen? That's a good way of looking at it. Let's see what people say. It will have a high impact in purchasing power. Wages means increased disposable income. That is correct. This equates inflation, more demand. That's all correct. So, in the period of 2022, we saw a large rise in wages, especially in most countries, to be honest. What happened was inflation was extremely sticky on the upside because people were earning so much. That's why one of the reasons why we saw a huge move in CPI across the board, everywhere really. The US, the UK for sure. UK's inflation is actually still pretty high. But New Zealand, Australia, a lot of people saw a large rise in inflation. Obviously, we came out of lockdown. There was a lot of buying. A lot of people came back to work. There was schemes like, I can't remember that scheme that happened in the UK, but it was like 50% off in restaurants. And then a lot of people were... What happens in high inflation is generally this is what happens. It's called a wage price spiral. And a wage price spiral is basically what happens is, unless anybody can let me know what you believe is a wage price spiral in the chat. But wage price spiral is as follows. Wages or inflation increases, let's say from 2.4 to 2.7 to 2.3%, 3.2%, etc. What does inflation do? It decreases the purchasing power because you're basically paying more for the same good as you did, let's say, last year. So your purchasing power of your money decreases, doesn't it? What then happens is people notice, of course, like, for example, if you live in the UK, look at like Freddo's, for example. They used to be like 25p. So I think they're a lot cheaper before, but now they're, I don't know, like 80, 90p, aren't they? So that's a prime example of inflation. People notice this. What do they go to their employer? They demand higher wages. They get the higher wage, cool. What then happens? Inflation rises because people are spending more due to the higher wage. What then happens? Higher inflation. And you can see that's why it's called a wage price spiral, where it just spirals out of control. Inflation rises, wages rise. Inflation rises, wages rise. And it's a spiral that not a lot of, obviously no economy wants to be in a wage price spiral. But that's what would happen in an environment where constant inflation, constant wages. Luckily, I think the UK did actually narrowly miss a wage price spiral in 23. But yes, that's generally what happens. And then obviously on the flip side, what you think is if wages are decreasing, inflation may start to decrease as well. Perfect. That's a good environment to be in. Then we had CPI from the UK this morning. Now, for those who like to look at the UK, and also if you do like to look at like the BOE, what inflation has the BOE stressed to watch the most? Because therefore we can look at only that data, because we know that then that set of inflation will drive what the BOE is going to do, and therefore what the pound is going to do. So does anybody know what CPI that the BOE has stressed at? So the MPC, the Monetary Policy Committee, what has they stated to watch the most? Have they stated to watch rent inflation? Have they stated to watch housing inflation, food inflation, services inflation, manufacturing inflation. What do you think the BOE has stressed? Now, this is a way you can break it down for future reference. The UK is heavily reliant on a certain sector that tells you what the inflation is. Think about the UK. Not a large manufacturing country. We're a very something country. Services inflation, that is correct. So what do? Obviously, on Forex Factory, it doesn't show you what services inflation is, like here. So that's why you go on other sort of outlets out there, and then you just find the service inflation. So we go to the United Kingdom, go to prices, and services inflation is right here. And we can see that services inflation decreased from 4.7 to 4.5. So that's a good sign for the BOE, right? That's a good idea to think that, okay, maybe now the BOE should start to be a little more dovish. Maybe the pound's going to be under more stress. But obviously with the UK, we are kind of in a bit of an interesting conjuncture where we also need to consider what the government is going to do in about, what's the date today? Next week, isn't it? So next week will be quite important for the UK. So the BOE has a little bit less of a impact for the time being. But once the government thing is all done and dusted, then we'll have a good idea what the BOE is going to do. Then what do we think? Anything else for later on today? FOMC minutes. So I'll show you what FOMC minutes looks like. It looks like a PDF, which is, where is it? Statement. I believe it's the statement, isn't it? Projection materials. Minutes here. So I'll show you what the minutes look like. So basically what happens is it opens, you click on it, it opens something like this. And then you obviously try and read through it. And what you basically think, right? I'll be honest, I don't really read through this a lot. I just go on to Bloomberg, and then it kind of gives me a good little oversight of it. So I'll just let the smarter people do it. But what you'll generally be thinking is, well, what people would look through is they'll look through this. A lot of banks have algos now or AI that looks through this and tells us what's different. But what they would be looking for is what is the difference between this FOMC minutes and what the Fed mentioned at their last meeting? What did Powell talk about at their last meeting? What was said in this initial statement, which is this one here? Is there a difference? If there's no difference, the dollar will not react. You won't see any market movement. It's only when there is a difference and people think, oh, damn, we did not expect that. That's when, remember, markets move on new things. So if there's nothing new, you won't see anything. So we don't know really until kind of it gets released, to be honest. Then Thursday, let's have a little look. NFP. Oof. Tomorrow's actually going to be quite a big day. The reason is we haven't had any BLS data. So BLS is the Bureau of Labor Statistics. They're basically a section of the US government who releases the data. Similar to the ONS for the UK, the Office of National Statistics. So you can see that average hourly earnings, which is BLS, NFP, which is BLS, Bureau of Labor Statistics, unemployment rate, of course, is BLS. So we haven't had that for about 2 months, I believe. What do you then think? This is going to have so much impact on markets because we haven't seen this data for about 2 months. What markets are going to do? Does anybody know what markets are going to do when this data is released? I'm not talking about reaction. I'm thinking about the thought process. What do you think markets are going to think when this data is released? Well, let's rephrase it. What do you feel? Well, what would you think when the data is released? How would you break it down? Because this is what we have to be doing. Every bit of data is just think, what does this mean for the theme? That's all you're thinking about. Does this point to a December rate cut or not? Because remember, the market's thought process, the theme is what the Fed is going to do and what the rate cuts are going to do. How do we determine that? What the data tells us. So if the data tells us that December is not going to happen, what do you think the dollar is going to do? If the data is actually a lot better than expected, not as worse, shall we say, the dollar will rally so strongly. If we see on the flip side, because markets are starting to price in a less of a rate cut, if we see the opposite reaction, you will also see quite a large reaction. Because to be honest with you, I'm a little bit more in the camp of, if I show you this website, and we'll speak about this website many sessions ahead, but CME Group, they have a Fed watch tool. Basically, it just gives you the percentage of the likelihood of a rate cut. And you can see right now, we're basically 50-50. So yeah, 50 basis points. So that's about 5, 10, about 12 to 11 basis points worth of pricing for a rate cut. So either way, you are going to see a reaction because there will be either 10, or let's just average it, 12.5 basis points each way because we're pretty much 50-50. So that'll be either 12.5 basis points. This is like a bit more fixed income now, but this is what moves markets, remember. You'll see 12.5 basis points, give or take, of a reducing the probability of a rate cut or increasing. So that's why there's a symmetry between either side of the reaction. So tomorrow will give us a good idea on the dollar, to be honest with you, whether or not we want to sell the dollar into year end, possibly longer, or do we want to take some tactical longs on the dollar? It remains to be seen. So what we're thinking about here is what the data comes in at. Is it stronger? Is it weaker? How will the Fed react to this data? That's what we think about. And then you can see later on that day, we have a lot of FOMC members. We have this one here. We have another one later on in the evening. They're going to give us, let me see, as long as it's not pre-recorded. Nope. Okay, cool. So they'll give us a good insight then into what this data means. So there'll be a lot of volatility around those FOMC members. Let's have a little look what else is going on here. Unemployment claims. Let me see. Yeah, probably won't move markets. Hasn't really moved markets for a long, long time. National core CPI from the BOJ. Does anybody know, or from the Japan, which is obviously going to give us a good insight into the BOJ. Does anybody know what is the main driver of the JPY at the moment? And remember, how do you determine what the main driver is? Basically, what is everybody banging on about when they're talking about the yen? Whenever you read news websites, whenever you look at Bloomberg or other news outlets that you like to use, what are they all talking about when they talk about the yen? That gives you a good guidance on what could drive the yen in the future. Does anybody know? Services inflation. Cool. Looks like we'll 26th of November, which is this. Oh, next Wednesday. Perfect. A week away. Nothing burger equals true. Buying rumor, selling the fact. That's also pretty true. Buying the rumor, selling the fact is a good way to understand markets' reaction to data. So if you've seen, for example, a stronger, has anybody noticed, so this is what buying the rumor, selling the fact is. What happens is data or price action strengthens into an NFP print. Let's say the DXY or Eurodollar sells off into an NFP print. So the dollar's stronger because let's say people, oh, my camera, sorry. Let's say people are, should sort my camera. I overheated. Let's see. I'll wait for it to load. But in the meantime, what generally happens, right, is the dollar strengthens into a meeting and then NFP comes out stronger. So that's people buying into the rumor that NFP was stronger. Then what happens is you see a opposite reaction to what should have happened based on what happened with data. Let's say it was a really strong NFP. Most people would think, oh, the dollar should strengthen on NFP. But if price action is strengthened into the meeting, then markets have bought into that rumor that it's going to be strong already. So therefore, it's no longer new news. And then what you see is an opposite reaction. But it doesn't change the overall direction. It just changes the reaction function of the dollar. So let's see. Trade tensions. Semi. China carry trade is also another good one. US and Japan trade agreements. Yeah, I mean, it was previously a little bit of a big one. But the main one that I'm looking for here is Japan's Prime Minister, which somebody has said. So, will CPI give us a good guidance on what the finance minister or the Prime Minister is going to do? Probably not. right? What we want to see, or the reason why the yen has been so weak, is because Takaichi, who is the new prime minister, the lady, what she is generally seen as is a dovish member, or a dovish leaning member. Basically, she doesn't want rate hikes. And remember, generally rate hikes are good for the currency as long as growth is okay, which in Japan it's okay. So therefore, a rate hike would be very good for Japan, or very good for the JPY. However, since she's come in, you might have noticed, if I show you dollar yen now, and we just continuously strengthen through 155. But this gap is when she was announced sort of the prime minister in the House, and then she went off into the D, which then gets voted again, and then that's when she officially becomes prime minister. But this gap here is when it was announced that she would become prime minister, or very likely, high likelihood. You can notice how the yen weakened off a lot because she's a dovish leaning. She doesn't want rate hikes to happen. And since then, she's not really given us a good guidance on the future of what the BOJ is going to do. So it's a bit unfortunate is if CPI does come in, let's say, a little bit stronger, I don't think the yen's going to have much juice to strengthen by it, because that's not the main driver right now. It's what the prime minister is doing. Abenomics, that is correct. Yes. So let's quickly do the giveaways. So for those who haven't done the little code to enter the giveaway, what is the code for the giveaway again? I'll just wait for one of the mods to put it in. Can't remember what it was. Let's see. I'll let one of the mods put it into the chat. But basically, we'll do the giveaway. So as follows, the three are as follows: an Apex account, funded next, and a 3-month Trade Zeller subscription. So to join the giveaway, I had a bit of a mind blank there. Just type this into the chat, and that will add you into the giveaway. We'll do it for about 5 to 10 minutes. And then after that, no more entries. And then we'll see who wins in about 5 to 10 minutes time. But basically, that's what we want to do. Please only do it once. If you do it again, you will be removed from the little list. Obviously, it'll be a bit unfair. So just do it once and then it'll add you in. So whilst I let you all put that in, let's have a little look at what else we've got this week. So yeah, national core CPI probably won't do too much for the yen because it's not the main theme, remember. Retail sales from the UK. Maybe. Retail sales hasn't had a lot of predictable value recently because it has been quite volatile. So I would kind of leave it out of the equation for the time being. PMI data, very, very big for the Europe. When you're looking at Germany, manufacturing PMI has been poor for about 2.5 years. And that was because obviously we came out of COVID and manufacturing sector got absolutely destroyed. And then since then, they have slowly recovered. That's perfect. Germany, obviously being a services economy, services and PMIs will be very good. What you generally should be doing, right, and I'll show you for the UK as well, is in PMI data, there are other subsections of data. And because we know the theme of the market is about rate cuts, and most across countries are generally the same. What is that central bank going to do? And what is rate cuts going to do? In PMI, there are subsections that tells us what prices have done and what has employment done. And that will give us a good guidance on a potential future for the central bank. PMI is a forward-looking indicator, remember. So it has an idea what could happen in the future. Not necessarily it will, but it does give us an idea of what could happen. So if I show you what it looks like on the chart or on the PDF, I actually prefer ISM in the US just because it's a lot easier to look at visually. But let me see if I can find it. Where is it? Let's see. Global. We'll just look at the US for the argument's sake. They're all sort of done the same in terms of the format. So I'll just look at just the US services PMIs. Then it will open up a PDF. Let me just zoom out a little bit. And then if we scroll down, where is it? It should be here somewhere. where is it? Activity, input costs. Input cost has risen. You have employment. So the rate of employment growth has only been modest. So you can see that within PMI data, you don't have to look at a lot, to be honest with you. Remember, markets only care about certain things. So you don't have to read through all of this. All you have to do is think, I know the main thing that markets are focused on right now is rate cuts and what the central bank is going to do. What data within PMI is going to suggest that? Everything else does not matter. So that's all we're thinking about for PMIs when we see that when it comes out. Let's see what else we got. Obviously, you do the same thing for the UK as well. Obviously, mostly the services. And then what do we have? We have core retail sales from Canada. Probably won't move markets, to be honest. And then a lot more FOMC members. So what we think is, what do they say about the data we see tomorrow? That's all we think about. What are their thought process on what is going to happen? Because then that could give us a good guidance on, is the Fed shifting into a December or no December? Then services PMIs, that's the sort of, that's the doc I showed you earlier. So that's all you're doing really when you're looking at data on the calendar, is you're thinking what data on the calendar this week is going to impact what the theme is going to do. And you can see how we crunched away all of the BS data basically to then only a handful of data that markets actually care about. And that's when we see the most predictable value. The data that will tell us about what could happen in the future, basically. So I will do the giveaway in probably a couple of more minutes time. But let's have a little look at a PDF. So let's start off with RBC. RBC Capital Markets. What's the bank? Royal Bank of Canada, I believe. Let's have a little look at their currency ideas. So let's start off with USD. And what I want you to do, right? You can pause through this and, of course, read through it in your own time. But what I want you to think about is not necessarily what their direction is, because at the end of the day, you have to have your own direction first before trying to look at other people, because that way you're not chopping, changing your view based on what other people are saying. They will get it wrong. Somebody else will get it wrong. It's about what you are doing as a trader is the most important one. So what I want us to do, right, is think about what are they saying and what are they looking at? Because that gives you a good guidance on, or what I would do, especially when I was learning for sure, is I'd look at all of this and think, am I looking at the same things that the most of the markets are looking at? And that way it gives you a good idea that are you actually focused on the important bits or not? And that's what I would use. So they go on to talk about December USD, cool, blah, blah, blah. What this means for the dollar is it will remain entrenched into the lower vol region for the USD, which suggests directionally sideways for now, which is this one here that they're looking at. Reopening the US government and catching up on 2 months of data has the potential to break the dollar out of the range, but is not guaranteed. And they say it's not guaranteed because, to be honest, it depends on what the data comes in at. If it comes in really a lot better than expected, then you are going to see the dollar strengthen further and further. Vice versa, if it comes in roughly at consensus, there's not much for the markets to work on. As a result, they will struggle to create a trade idea for the dollar. If it comes out a lot worse than expected, that has predictable value. Then we can think, okay, now December comes into the equation. Now the dollar can start weakening off. Who is better than the US at the moment in terms of data? You'll be looking at Australian dollar, you'll be looking at Europe. And these are trade ideas that we could be focused on. And that's all we're looking at. They then say, near term, the outlook depends on the dynamics. If the Fed maintains relatively hawkish stance, so that's what we was talking about there. And this is not our base case, which biases a weaker dollar as the FOMC resumes its cutting cycle and cuts by 75 basis points in June. In that scenario, the dollar will weaken off. Remember, cutting rates is generally bad for a currency. Because remember, when you trade FX, you're following the flow of money. So if you're seeing that you're getting better returns elsewhere, you're going to put your money out of that country that is cutting i.e. you're getting less returns and putting it somewhere else. And that exchange basically is like buy GU, where you're selling USD, you're buying into the UK, or buy Eurodollar, selling USD, buying into Europe. That's what happens. Let me double check if there's any questions. So they're actually looking for a lot more bearish dollar in the future. And you can see, let me scroll down to their forecasts. I put this into the Discord, by the way. So if you haven't joined the Discord, please do. But you can see 119, 121, 122, 124. And that's because on Eurodollar. And that's because one of the reasons are, as a result, let me scroll up a little bit. Euro, they are looking for, catching up. Rate differentials outperforming equity markets, and it's not a base case. Weaker USD and FOMC resumes its cutting cycle. So that's their base case on what they believe is going to happen. And then in 6 to 12 months time, a lot of things can happen in 6 to 12 months. So I kind of don't look at that because again, all we're focused on is every week we're just seeing, is there anything new happening? If there's not, perfect. If there is, how is this going to impact markets? Let me see. Look at the volatility index of the S&P. Okay, I've never really traded the VIX before. Website, I'm not sure what you mean, which website. Please wanted to ask if it's okay. I don't know a lot about most of you explain in this live and I'm following. I only focus on my strategy and continue. That's fine. That's perfectly okay. Again, what you're doing with fundamentals is what you're trying to do basically is increase the probability that you are going to win that trade. That's all you're doing with fundamentals. If you can grab more percentage probability to win, then you will take that. And that's what fundamentals do, is it gives you a good idea, obviously not 100%, but it'll give you a good idea of what should happen in the future. And after that, you just adjust your technicals to that idea. So if we know, for example, I don't know, let's say NFP is a lot worse than expected, a lot better than expected, sorry. We know dollar yen is going to continue to climb. Without even looking at a chart, we know in the future that dollar yen is likely to climb. Then all you do, for example, is you only then look for demand zones. You're not looking for supply zones because you're not selling. Nothing's telling you to sell it. So what do? You just look at any demand zones possible. You have a demand zone down there. So if we pull back into around 155, 400, which is there, I'll look for buyers, go on the daily time frame, scroll to your left, and then a target would be about 158 because that's the last high there. If it trades into 158, then what do? You think about what's driving the yen or dollar yen at that moment. BOJ, the Fed, whatever. Does it still tell us to go long still? If it does, hold that trade, get into another buy. Take partials on that swing trade you've taken. Now you have more margin to play with. So that's basically what fundamentals is doing. It gives you a direction without even looking at a chart. So therefore you're not clouded by volatility. That's number one. And it increases the probability of you correctly taking a trade in the direction that markets want to trade. That's basically it. So yeah, again, it's completely up to you. If you want to trade it, it's completely fine. But everybody that I know has done fundamentals have seen an increase in their hit rate and their win rate. So at the end of the day, it does work. It's just difficult to learn, and that's why not a lot of people do it. So if you're willing to do it, it's definitely beneficial. What's a sensible stop loss for a strategy trade for NFP? I don't trade NFP, and you should never really trade news events. So the reason for that is because, number one, it's very, very difficult to predict what a news event is going to do. So what you're going to be doing is reacting on the news. And I know for sure, I've been in this industry a very long time. The likelihood of you becoming profitable from trading news events is so slim, it's basically impossible because there's so much volatility at all given times around news events that is the predictable value is terrible basically. On the actual hour, it's bad. What you generally should be doing is waiting for the news events to come out, letting volatility die down, and then thinking, what does this data mean for the future? And then that tells you generally what price action should do in said future. And then you just adjust your price action accordingly. So if you know NFP is, let's say, a lot better than expected, unemployment rate, which is also tomorrow, is not bad, you know, likelihood of the dollar to increase is pretty high. So therefore, we know then once the pullback happens, you get into a buy on the dollar. That's basically what you're doing. So never, never, never trade news events. I've never seen anybody become profitable from trading news events, by the way. And as I said, a long, long time I've been here. So where was I? Now let's do the giveaway. So if I can grab the names, which are over here. Where is it? Here. I think this is the old name, so let's delete that and let's add on the new ones, which are here. Perfect. So yeah, like I said, never, never, never trade stop losses. So stop losses and like news events. So let's have a little look at some of the giveaways now. So for example, the first one is, let me scroll up, is an Apex account. And please, obviously there is a little bit of a delay between what I say and what I see in the chat. So I will wait probably 30 seconds, maybe a little bit longer, just so the person who wins drops it in the chat that they're here. And then afterwards, create a ticket on the Discord. There is a few tickets to go through, so just bear in mind that you will be waiting, but we will get back to you nonetheless. And then we'll give you the details on how to claim the account or the trade seller subscription, which is the last one we're doing today. So firstly, let's do Apex. And if you're here, drop it in the chat, say I'm here, whatever. And then afterwards, claim a ticket in the Discord. So let's scroll for an Apex account. So, oof, that was close. Status Master MP366. If you're here, just drop it in the chat. Basically say I'm here. And then, as I said, just create a ticket in the Discord and we'll get back to you as soon as possible. So how do I get to learn this fundamentals? Because then I love how you explain. Perfect, thank you. I'll teach it through the sessions. I'll teach it through the sessions. USD Swiss is miss. I missed them buyers. Do you think there will be a pullback? Let me have a look at dollar Swiss. I don't know if I'm looking at dollar Swiss at the moment. I am not. As in one of the breakdowns I did, I was just not looking at it because it's consolidation basically. As you can see, we're not making higher highs or higher lows. So technically it doesn't make sense. So I leave it alone. Where am I? Over here. If your name's not here, it's probably because after the cutoff date. So are they here? Status Master. Let me double check. It does not seem like he is here. Cool. All right. Unfortunately, you're not here. So we're going to have to remove you out of the equation and redo it again. So this is again for Apex. So this person, Bull Pathfinder, please drop it in the chat if you're here. And then we'll get back to you, or we'll get back to you once you create the ticket in the account on the Discord. How do you use fundamentals differently for investing and not for trading? That is a good question. So I am not really a big equities trader. I used to do it back in COVID. I don't do it anymore. But what you generally be doing when you're trying to invest, what you're basically doing is looking at, number one, how is the company doing? Are they doing great? Are they not doing great? You do fundamentals behind it. So what are their financials like? What are their price per earnings, shares, whatever? That gives you whether or not there's going to be good value there. Then you think about the global economy. So what you would do is stuff like, is the Fed expected to cut? Are they expected to do this? Because that creates the short-term volatility that you can use to get in. And then what you would be doing is every earnings, just think, does this have good value for the future? I'm not an equities trader, so I'm not probably the best person to do, but that's generally what you should be doing. Everyone has their own sort of adjustment here. So this person here, Bull Pathfinder, you are here, perfect. So yeah, as I said, drop your name into the Discord, create a ticket, and then we'll get back to you as soon as possible. Like I said, there are a couple of tickets to get through, so you may wait a little bit, but we will always get back to you as follows. So let's remove you, and the next one is for a funded next account. So let's re-scroll again, and let's see who wins this time. On the 4-hour trend, it shows an uptrend. I don't really look at those time frames to identify trends. The trend tells you what is going to happen via fundamentals. And right now, the dollar is strong, and so is the Swiss. So it's an environment where you're trading strong versus strong. So even though the 4-hour is uptrending, if you look on the daily, there is no trend there right now. There is no trend here. So we leave it alone. So don't be so focused on the short term. And 4 hours technically not short, but don't be so focused on one time frame. Also go on the high time frame, the daily time frame, and then that gives you a good direction. But like I said, the fundamentals tells you the direction, and right now there is no direction based on fundamentals. So the Trader's Nest, yes, you're here, perfecto. You know the gist by now. Create a Discord ticket, and then we'll get back to you. So let's remove you out there, and let's re-scroll for a 3-month Trade Zealot subscription. And you must remember, you must create a ticket within 24 hours. I believe I said that earlier. So let's see. This is for a 3-month Trade Zealot, by the way. Andy Lewis 1082. If you're here, drop it into the chat, and then we'll have a little look at it. Let's see if there's any other questions. I can't see any right now. Not that I can see. We'll have a little look at more, a couple more technicals, and then we'll have a little, then we'll end the live here. But if this person's here, drop it into the chat, and we'll have a little look. Doesn't seem like it. I'll give it a couple more moments. But before I do that, I will be getting up some charts. So what we're going to be looking at, right, is euro dollar. We'll be looking at, I'm just thinking which trades have the best value at the moment. I would have dollar yen possibly, but we are kind of in intervention territory. So it is a little bit difficult to trade. Sorry, my camera turned off again. So it is a bit difficult to, or it has, you know, if you don't want to, it makes sense to buy it, right? But intervention can happen at any time, so it's just a bit volatile. So let's see, Andy Lewis, are you here? Doesn't seem like it. So unfortunately, you are out, and we are re-scrolling again. I'm just double checking again before I scroll. I can't see them here. So next one, Trade Zealot. Unfortunately, that person was not here. So this one is, again, for a Trade Zealot. Golden Eagle 3842. If you are here, please drop it into the chat. What is Trade Zealot? I'll show you. It's a journal. So if I'll show you this, basically looks like this, and it's like back testing, right? It gives you good stats on back testing. So obviously you should always be journaling, and journaling gives you a good idea on, are you noticing a theme about you tend to take the most losses X, you tend to take the most wins in this certain environment. And what this does is it basically gives you a very visual representation of that. I would rather do this than sort of a paper, to be fair to you, or just writing it down. This journaling never really existed when I started. So unfortunately, it's just one of them ones where you had to either make an Excel spreadsheet or write it down. It's a bit unfortunate. But let's see. Golden Eagle is this person here. It doesn't seem what's that one trait that separates profitable traders from unprofitable. That's a good one. the one that I've seen, or the people or the trait that I notice is, I'm just trying to think what I'll get back to you on that question. I'm just trying to think what a very good one is. But unfortunately, this person's not here. So we're going to re-scroll. Let's see. Again, for the trade zealot. Ask Me Engineers. If this person's here, please drop in. So the trait that I would say, obviously, mindset and psychology is important, but I've noticed that psychology can generally be fixed by understanding what type of trader you are. Basically, if you are more of a chilled out, less erratic person, then higher time frame swing trading is probably best for you. If you are very, you want to be on the charts constantly and that's your personality, then maybe a lower time frame is going to be okay for you. Swing trading, maybe not so much. So obviously mindset is important, but like I said, mindset can generally be fixed by understanding the strategy and understanding general direction, which again comes from fundamentals, and we spoke about that earlier. I would say the best people that I've seen has this common trait that they are like a sponge. And the sponge meaning they are happy to do as much work as physically possible. They're happy to learn as much things as possible. And they put in the work. We're not saying people don't put in the work, but like there's levels to be in, maybe doing it a little bit at a time and then going about what you're doing, playing PlayStation, PC, whatever. This person will put in time. And that's generally the best traders that I've seen, is they want to put in the time. So, Ask Me Engineers, are you here? Let me see. Unfortunately not. The list of names, I do have them. I got sent to them earlier. So, let me see. I'm going to have to remove you and reshuffle it. The list is yes, here. This, at the time, once we stopped it, that was everybody that clicked ! join. This person, Jera Jam, are you here for a trade zealot? One-to-one mentorship, I do. I haven't really done it very often. For those who have been following me, I don't generally push any of that. But if it's possible, if you want to, then sure. But unfortunately, I don't. It's not something I push out. I do, yes. Trade zealot, I appreciate you from BMO. Thank you very much. Cool. All right, you're here. Perfecto. So you know the gist by now. Put it into the Discord, and then we'll get onto that as soon as possible. Like I said, there's a few tickets to go through, so we'll get back to you eventually. So let's look at some charts now. And what we're doing, right, is without even... Let me ask this question. And I think I asked this before, but for those who are new here. If I told you that in Turkey right now, from a fundamental perspective, that the growth is not great, we have a high unemployment rate, the inflation is very high, interest rates are through the roof, there's a lot of political issues. Is the Turkish lira going to be stronger or weaker without even looking at a chart? What do you think? Stronger or weaker? Just put up or down. Because then that tells you fundamentals is important. I told you exactly what the fundamentals are for Turkey at the moment from when I last looked at it a few months ago. I'm sure it hasn't changed much. We know then what price action is going to do in the future. So what do you believe? Based on what I've told you about Turkey, high inflation, high unemployment rate, growth is not great, dovish central bank, or the central banks can't really do anything in that scenario. Currency is going to be, let's see, weaker. That is correct. So if I show you now, let's look at USD try. Oh, this one over here. USD try, which is Turkish lira. You can see, based on even looking at a chart, without even looking at a chart, sorry, you know that Turkish lira is very, very weak. This tells you how important fundamentals is, because without even looking at it, if you just bought at any given point, right, regardless of entry, and you know that the future is not looking bright, you would be in profit by now. Does that make sense? If you know that in the future, let's say there is going to be, I'm just trying to think of another currency that's really weak. BRL, I think, is a little bit weak as well. Let me double check that. Or has been weak for a good few years now. Has strengthened a little bit in the near term. Mostly on the dollar, to be fair. Or dollar has been one of the culprits of that. But in this period here, you can see that BRL has been weak. A bit of consolidation there for about a year and a bit. Obviously, COVID through here as well, driven by fundamentals. I haven't looked at BRL's fundamentals in a while now, but you can see during this period, 2024, a lot of weakness. And what you're basically doing is what drove the price action prior to it. And all you're doing is you're looking to your left. Does the thing that was driving those price action and on your left continuing? If it's continuing, then you remain short the BRL. Let me double check another one. I'm going to throw in a little bit of a curveball. I want to see if anybody knows. USD AED. Is it going up or down? Is it going weaker or stronger? Based on the fundamentals. Based on the US fundamentals. What do you think is going to happen? Let's throw in a little bit of a curveball here. And I'll explain to you why the price action is doing the thing it actually is doing. What do you think USD AED is doing? So the dirham. What do you believe is happening? Well, without even looking at a chart. Up. Interesting. Maybe. You never know. And I'll show you what the price action is in a moment. And then I'll explain why this is happening. And this is why having a broad knowledge across most markets, obviously I'm much more of an FX person. So I'm also focused on FX. But if I were to trade equities or another asset class, what you learn in fundamentals will apply to all markets. I don't really trade the NAS very often, or don't trade the ES. I can't remember, I think it was 2 years ago I traded it. But I know at the moment that there's a lot of turbulence in the Fed in regards to December. Therefore, you're more likely to sell the ES than buy it. If we see that data then comes out weaker that suggests rate cuts but doesn't point recessionary, which when there is recessions, the equities do tend to sell off. That's what I'm saying. If it doesn't point recessionary, I know I want to buy ES. Only demand zones, regardless of time frame, should only be going in the direction of fundamentals. So, AED, apologies, my camera has sort of died out again, but you can see on price action, if I just go on the hourly time frame. Let me try and turn it on again, see if it works. This generally what happens to, they do tend to overheat a little bit. Perfect, there we go. So, USD AED, so the UAE dirham, is trading sideways. And the reason for that, this is on the daily time frame, it's trading sideways. Does anybody know why that's happening before I explain why it's happening? Why is USD AED moving sideways like this? It's not really tradable. It's not a tradable currency, but why do you think it's happening? There's a lot of turbulence here, but markets don't really, you can't really trade AED or USD AED. The reason why it's doing this is because it's a pegged currency. So a pegged currency is basically a currency that is tied to another. So because AED is tied to USD, it's very predictable for exporters and importers, of course, because the currency hasn't got volatility. Because when you are trading euro dollar, it has that swings, you know, from an exporter, from an importer, from a current a government perspective. It's a bit difficult to predict how much money you're going to bring in or how much you're going to earn if the currency is always swinging, right? It's going to be difficult to predict. Whereas the reason AED is pegged to the dollar is because it's predictable for them when they sell their oil. They know that the currency is generally going to stay around 3.67 dirhams per dollar. So from an exporter perspective, they know that if I sell 100 tons worth of oil at said dollar amount, I'm going to be earning this for sure, based on the price action or based on the exchange rate. That's what a peg currency is, by the way. That's just a little bit of a curveball that I wanted to throw in. So let's look at euro dollar. And like I said, we are going to have a little look at two sides of the scenario, because tomorrow, like I said, will give us a very, very good idea on the scenario. So what are we focused on for tomorrow? Number one, we're focused on what does the data tell us? So does it tell us basically is December going to happen? December going to happen. If it's a yes, because let's say poor NFP, rising unemployment rate, etc., then USD lower. If December isn't, or let's say isn't, this dollar goes higher because there's still rate cuts priced, right? And this is a bit more of an advanced thing, but rate cuts are still priced. So we need to remove about 10 to 12 basis points worth of pricing for a cut here, which is on the left. And that strengthens the dollar through the angle of rates, which is the bond market. So if that isn't, then dollar goes higher, euro dollar goes lower, obviously. Dollar yen goes higher. And it has predictable value because it tells us what's going to happen in the future, right? We know in the future then, based on the data, December may not happen. Therefore, the dollar will continue to strengthen until the data tells us that it may happen. If it doesn't, and each week we see more and more data come out that suggests no cut, then we still hold the long on the dollar. We still hold the short on euro dollar. We still hold the long on dollar yen, although that's a bit of a choppy one because of the MOF who may intervene. But that's what we're doing. So therefore, there's our value. So let's have a think about price action now. So let's look at through the angle of dollar lower because December is going to happen. What do we do then? We mark out only demand zones, right, on euro dollar. Fundamentally, Europe's good. So there's nothing to worry about on that front. It's just purely the dollar, which is the driver of euro dollar right now. So what are we doing? Only looking for demand zones, which should come around. It's a bit unfortunate we haven't. Okay, so obviously this is a bit of a different scenario because we haven't got any demand zones. I'll be looking then at whole numbers. So 115 whole, like I've marked out previously, would be the region I'll watch. And for those who may remember from our last session, wait for a breaker structure around that zone. So let's say we come a little bit lower. It's not that deep. As long as we see a breaker structure and create a higher high, we anticipate a higher low at a demand zone to then push back up again. So that's what we'll be looking for euro dollar. On the flip side, let's say the data suggests no cuts. Let's say a lot better than expected. What you'll then be doing, because all I'm doing now is just waiting for the data to tell me, because nobody really knows what NFP is going to do, hence why dollar's been a little bit erratic. It's just people taking short-term trades, letting them do their thing. That's perfect. But what I'm more so focused on is the future. What then I'm thinking about is a supply zone, right? Because we're looking on the flip side. A supply zone is right here. On supply zone right there on the 8 hour. Let me check the 4 hour. There is a 4 hour supply zone there. So let's expand that box. Perfect. What do? It reacts. Euro dollar will react as such, obviously. Dollar strengthens. Then we'll see a pullback. I think it'll be quite shallow. So I'll also monitor that low created there. And then if we see reactions, then I'll get him. If I don't see any reactions, then that will be the supply zone that I'm watching. And then where you're targeting, go back onto the higher time frame and then look to your left, which you should always be doing to figure out where price action should go. You could generally aim for maybe this first low here, but I'll be more interested in 114, which is this low here. And then as we price into that or trade into it, we ask ourselves, is the reason it's selling off continuing based on the reason it sold off in the first place. That's all we're doing for euro dollar. Seems simple enough, right? Euro New Zealand which is the pair we looked at on our last session, which was about 2 weeks ago. With price action was around, I think it was around here, and we rallied quite aggressively to the upside. All you can see, fundamentals is not changing regardless of price of the pullback. The pullbacks are telling us that there's profit taking occurring. Generally, this is mostly profit taking. If you see the reason that sold off here, it will happen for reasons. This will happen for a reason. This will happen for a reason here. This will happen for a reason here. But you can see that there's not that big of a pullback because there's no reason for it to pull back that deep. As a result, Euro New Zealand has been quite choppy. However, I'll still favor upside because nothing has changed. Things have pointed still to go long. So we can therefore insinuate that in the future, price action is going to be higher based on what we know. Now we only still look for demand zones. It's only when you see things switch is when you switch your bias. If you're not seeing that, you stick to your bias. So I'm still looking for demand zones. I mean, that's still a valid region. It's a daily area of demand. But I am a little bit also focused on, number one, we do have a daily demand zone here. You can see how simple my technicals are, right? Then you don't need to make it complicated. I've seen so many people make technicals complicated. Trust me, I've been there, I've done that. I've realized that you just generally, like, technicals aren't that important for me. It's a little thing to understand where can we enter roughly from. It doesn't tell me which direction to go though. So daily 6-hour demand zone right here would be the region. Then I'm looking for longs, looking on your left for a, for a target. And you can see that I've marked up this high here. So anywhere between 2.1 to 2.12, if we keep it nice and whole. There we go. Euro New Zealand is still a nice long. Euro GBP is also another good long. Although we have price action is kind of choppy recently, it's a little bit annoying. What I'm also focused on right now is a breaker structure, and I want a daily closure above this high here. This high, lower high, made the lower low. We then pushed. We haven't closed above the high yet, so I don't want to look for a long just yet. I know I want to be long. I just need to let technicals also be in my favor. So therefore I have 2 check boxes ticked. Then we then do the same price action. Start on the higher time frame. Is there any demand zones? Because I'm longing. And then I'll look for long still. So I don't know if there's any 4-hour supply demand zones. There isn't. So unfortunately, let's see if something gets created when we close above the high. Once it closes above the high, hopefully we'll have a little demand zone created around here. And then we'll look for a long, look to your left. You can target one that wick if you really want to. Look to your left further. And then we could just target around this high here. Lastly, trying to think of another good trade. EuroCAD is actually pretty good as well. The issue with EuroCAD right now is CAD is being driven by the dollar. And what happens, right? You may have seen. What pillar is currently moving the market? That's a good question. I would say right now it's a mixture between equities and rates. Because equities has fallen because of the dollar or because of what the Fed wants to do. But that fall in equities has also impacted the dollar and impacted other currencies as well. Whereas if you look at other currencies like euro dollar, it is being driven mostly by rates and rate cut expectations. So it depends on the currency you're looking at. It's not like one. Generally, it's easy to understand which one, but because we're in a different environment, because we haven't really had any employment data, it's a bit unpredictable to determine what our camera is. But it's a bit difficult to predict what pillar it is until we see proper data. But right now, it's a mixture between equities and rates. So EuroCAD is actually a good one that I'm looking at. I still want for longs, to be honest with you. The price action's not great, I'll be honest with you. Price action is not good at all. So what I'm looking for then is number one, once the dollar starts weakening off, I think that's when we get in. Because the CAD strengthens on the crosses when the dollar strengthens because of the trade relationship between Canada and the US is so close. Obviously, they share borders and as they do a lot of deals together. So when the dollar strengthens, you do tend to see sometimes the CAD strengthen as well against like the euro, against the UK, against the Australian dollar, etc. So I think EuroCAD does still have a bit more upside. I'm just waiting for the dollar side of the equation to start weakening off. If we don't see that and we actually see NFP a lot better, I think AUD CAD sells would be a very good one because number one, AUD is a risk on currency. And right now, ES is not doing great. And ES is or Australian dollar is very sensitive to ES, especially because if we see that December is not likely, that is not good for equities. Therefore, AUD struggles. As a result, CAD will probably strengthen on the crosses. So you see like AUD CAD sell off further. You'll see AU sell off. And you can see with AU right now, we are situated very closely to a daily supply zone, which also lines up with 0.65, which is a whole number. So that would be a very good sell on the Fed opportunity. Can you see how simple we need to make technicals? Like, you don't have to have a lot of complicated things out there when you're looking at charts, because remember, the most of the work is going to come from understanding what the data is telling us. If the data tells us we should be buying, then we only go for buyers. We don't look for supply zones because nothing tells us to sell it. We're going against the whole reason it has to go higher. At that point, it's more guesswork. What we don't want to be doing is guessing where price action is going. And that comes from understanding the data. So apart from that, those are a few trade ideas. Like I said, it's probably best to wait for tomorrow from the Fed, which is here. And then and we'll interpret what that means. I might chuck some stuff into the Discord. I'll see. But we're basically interpreting what it means. And then that tells us whether or not the dollar can probably strengthen until year end or probably start to weaken off a bit more. You can see stuff like RBC is expecting dollar weakness. I don't know what JPM is expecting. Let's have a little look. Break 117. I cut the balance of my Kiwi longs. Up performance. Payrolls. I'll excite it mentally. They don't really say too much there, to be honest with you. But yeah, I don't think they're saying too much. I know that she was looking for longs on Eurodollar previously. So people do want to position against the dollar. It's just that we haven't got a reason just yet. So let's see if that reason comes through tomorrow or not. But if there are no other questions, I appreciate you all for being here, of course. If there are any questions, like I said, please just at me in the Discord, or you can send me a DM. You should be able to. I think my settings are turned on in Discord. But apart from that, everybody, have a good rest of your week. We'll see what the Fed or what the data does tomorrow. Hopefully it can give us some good trade ideas, and fingers crossed. If not, it's a bit unfortunate. We'll have to probably trade other currencies for the time being. But I'll probably let you know in the Discord tomorrow. But apart from that, everybody, have a good rest of your week, and I will see you soon. Take care, everybody.